Cairns is a tropical tourist city in the far north of Queensland. Sydney is the biggest, most competitive rental market in the country. And yet right now, finding a rental in Cairns can be harder than finding one in Sydney. Today we break down why. Vacancy rates in Cairns have fallen to levels that rival or beat Sydney's own extremely tight rental market. For a regional tourist city to outcompete the nation's largest metropolis on rental scarcity is genuinely unusual, and it comes down to three forces converging at once. The first is the local economy diversifying well beyond tourism. Cairns still relies heavily on visitors, but it has also become a meaningful defence and healthcare hub for the far north, adding stable, well-paid jobs that support long-term tenants rather than short-term holidaymakers. That combination of steady workers plus a constant flow of tourism and seasonal workers puts unusual pressure on the same limited housing stock. The second is genuine housing undersupply. Far North Queensland has not built enough new homes to keep pace with population growth, and cyclone risk plus rising construction costs have made new projects slower and more expensive to deliver. When a growing population meets a construction sector that cannot keep up, rents are the release valve, and they have been rising accordingly. The third is investor exit. Some long-time Cairns landlords have sold up in recent years, either cashing in on strong capital gains or exiting due to rising insurance costs. Every property that moves from a rental into an owner-occupied home removes a listing from an already thin pool of available rentals, tightening the market further. For investors, the result is rental yields in Cairns sitting comfortably above what you would find in Sydney or Melbourne, often approaching 5% or higher in some suburbs. Combined with capital growth that has also been solid over the past year, Cairns currently offers one of the more balanced combinations of yield and growth available in an Australian capital-adjacent market. But the risks are real and specific to this part of the country. Cyclone exposure means insurance premiums in far north Queensland have risen sharply, quietly eating into that attractive yield. The local economy, while more diversified than it once was, still leans heavily on tourism, which can be volatile during global downturns or shifts in travel patterns. And regional markets like Cairns tend to be more cyclical than the big cities, capable of turning quickly if conditions change. So how should you think about Cairns right now? First, recognize that the tight rental market is being driven by genuine structural undersupply, not just temporary noise, which suggests it may persist for some time. Second, factor in the real cost of cyclone insurance before getting excited about the headline yield. Third, treat it as a regional market with regional volatility, not a substitute for capital city stability. Cairns quietly outcompeting Sydney on rental scarcity is a powerful reminder that Australia's housing pressures are not confined to the big cities. If you found this useful, hit subscribe, because we break down a different Australian property market every few days. See you in the next one. There is a broader pattern here worth understanding, because Cairns is not an isolated case. Across regional Australia, tourist and lifestyle towns with genuine year-round populations, rather than purely seasonal ones, are increasingly outcompeting the capital cities on rental scarcity. The reason is that these towns combine two sources of housing demand that the big cities experience more separately: permanent residents needing long-term rentals and a steady stream of workers and visitors needing shorter-term accommodation. When both draw from the same limited pool of dwellings, vacancy can fall to levels that would be unusual in a city with a single, more predictable rental market. It is also worth understanding how this affects the type of tenant you are likely to attract in a market like Cairns. Because demand is coming from such varied sources, healthcare workers, defence personnel, tourism operators, and long-term locals, a well-located Cairns rental can often be relet quickly even if a tenant leaves, which reduces the vacancy risk that would otherwise worry an investor in a smaller, more narrowly based regional town. This diversity of tenant demand is one of the underappreciated strengths of the Cairns market compared to a town that depends on a single industry for its rental base.